decent price action today, obviously. We'll go through that. Some lower time frame, higher time frame stuff as usual. No psychology bits, but if you got any questions from uh, today's price action or anything from yesterday as well, we can cover that. True. But anyways, no retiring yet. I'm 21. I got plenty of time to go. I am, yeah. Fantastic work by him. But anyways, to get back into it. Higher time frame, obviously. So we'll pull up the economic calendar from today. We've got tons of news this week, all high impact. CPI is obviously a tier 1 news release, but you do want to be mindful of PPI and of core retail sales month over month. Those are all high impact in terms of, like, obviously you have red folder, but from the red folder category, those are all very meaningful points of data that banks are looking at, that retail is looking at. So you want to be mindful of those, and the days before and days in between are going to be a little bit harder to trade if you don't know what you're looking for. It also is August. So with August price action comes typically a lot of consolidation, a lot of weird stuff. It's normally the second hardest month out of the, or actually the first to second hardest month out of the year. December is kind of up there as well. So understanding how to navigate these markets and find reliable setups as a result is something that you want to be focusing on. So obviously it's not required, but just the psychology part of it, of worrying, sometimes can cause damage that doesn't need to be done. All right, so tomorrow we do have PPI, and then Friday core retail sales. So those are kind of the ones that I'm looking for. But today's trade kind of met my weekly targets, so I don't need to trade the rest of the week if I don't need to, but we'll go through that. So today we have no news. We know that obviously day before PPI is going to be a little bit harder. So this is a day that if you had to pick, you could skip. But nonetheless, we'll still look at price action. We're currently sitting at all-time highs. Kind of this slow grind up all the way through the large displacement that happened during NFP week. We've been respecting imbalances and order blocks on the way up, so consecutively looking for upside price action. And then we are left with this imbalance here on the 4-hour chart the price is trading back into. So with a day that has no news, and as we're at all-time highs, you still have to play it kind of as all-time high conditions, but you want to be looking for what the market is always looking for, which is liquidity, right? External range liquidity is liquidity. Internal range liquidity is also a pool of liquidity, right? Imbalances are basically liquidity pools that haven't been filled or were ran out too quickly. So we're always looking for liquidity in the market. And as we're at all-time highs, it does make it a little bit harder to pick shorts. But as you see the price action that goes on and the rules that you follow within these kind of days, it allows you to take trades that are in line with bias, and also kind of letting some of the price action play in helps strengthen that bias as a result. All right. So on the 4-hour chart, yesterday we had this kind of retracement back inside of this imbalance here, inside of this order block, and then it expands up, takes out the all-time highs, and leaves behind this imbalance in its wake. Okay. Now, assuming we're still in a bullish profile here, we're going to be looking for those inefficiencies to be retraded into, and then expansion away from on those high impact news days, right? Yesterday had that expansion away following the Monday retracement. And now PPI is on Thursday. What is Wednesday most likely going to do? Probably going to be that internal range trade again for another expansion move higher on the news driver, right? So that's kind of what we're looking for, is already this bias that it may not be the expansion day. We're not really looking for a non-news day to be an expansion, but rather potentially a retracement or a short-term reversal back inside the range. And we can obviously narrow that down using lower time frames and looking for that kind of key signatures that will help us assist in finding a bias. So that would be the kind of loose higher time frame reasoning, is we're looking for a retracement back inside the range before an expansion tomorrow with the news. And as we drop down to a lower time frame, the 1-hour chart, this normally can help assist kind of in that process. I was looking for obviously where the liquidity is. The 1-hour chart, the 15-minute chart can assist in this greatly, is looking for where is actually the liquidity being printed going into 9:30. Okay. So inside of this range, number one, we can just look at visually what's going on here. We have a swing high here in the form of external range liquidity from London high being ran out. And then we have an internal range of liquidity right here, which is an inefficiency. Also this inefficiency down here. And you could potentially be looking for, in this case, external print back to internal. But as we go to the 15-minute chart, a little bit more clarity shows up where you start to see where the liquidity is in the market, right? And I'm emphasizing this because this is what you're going to be targeting on these lower probability days, is where's the easiest low-hanging fruit objective that you can snipe. Take that as a scalp, or in this case, it actually goes majority of the way, and just be done with it, right? If that's what you're looking for on this day, you need to understand what the targets are and what you can actually look for. So since around noon of yesterday, we've had this very high resistance move up, right? Not a lot of breakaway gaps being left open, constant consolidation, lethargic moves higher. And a lot of this, obviously a lot of this consolidation in here, but a lot of this low resistance sell side liquidity is printing as a result. Okay. You see the same exact thing going into Monday, right? A lot of consolidation, printing in the market, multiple swing points, and then Monday is the retracement for the Tuesday expansion higher. So all of that in combination with the consolidation on the lower time frames, the higher time from the 4-hour chart showing that internal imbalance on the low, can help strengthen that bias. Now, that doesn't mean that right at market open, you have to look for shorts, because you may not be confident in that, especially since we're at all-time highs. You're not supposed to be picking tops. How do we trust that this is something to look for, right? That's kind of a hard thing to do. Is, okay, if you're not super confident in this kind of price action, all-time highs is scary because of that one psychological reason. You don't want to go long because you don't know how far it's going to go, and you don't want to be shorting it because you don't want to be picking tops. And that's the psychological problem that sometimes you're faced with in all-time high conditions. But in reality, you just have to trade it like you normally do. Look at the data, look at what it's presenting you, and be confident in the setup if it's being presented to you. The range below the old all-time high should be balanced, right? So the real range at the moment is from the previous all-time high to the all-time low right now. Yeah, I would be looking. The range right now currently is, yeah, from this high up to down to this low. That's the current range we're dealing with. But yeah, this entire down move here is fairly balanced, almost perfectly balanced, right? So going back to the 15-minute chart, we have time-based liquidity pools, right? We have London low there, Asian low there, PM session low from the previous day. And we also have, if you guys know about kind of how the New York session is printing, there's a session or part of the kill zone. If you can take the kill zone, you split it into sessions. You have liquidity that's forming between the times of 7 a.m. and 9:30. So that's another low-hanging fruit objective that you can look for as a scalp. And you can take partials there. But in this case, if it's in fact a true New York open reversal, London low is your low-hanging fruit. If you're in the PDF group, that's true. Anytime you have a New York open reversal, London high, London low is your low-hanging fruit for that entire daily range. So if you're expecting this to be potentially the high of the day, that's your target, as well as any other resting liquidity targets as a result. Now, that's kind of building the bias. Okay, so that's just as important as the lower time frame stuff, but you need to understand this so we can actually get into the why the lower time frame we could be looking for and trusting shorts. But before we do that, let's go into kind of the breakdown of what we're dealing with. So it's kind of soft bias. Maybe you're not super confident in it. Your soft bias would be potentially looking for bearish price action. We know that the kind of approach for today is going to be definitely more scalping, right? We're not trying to take the entire daily range because we're not likely to see an entire daily range expansion without some stop runs. So more of a scalping approach. And we understand that there's no news. So what is going to be our preferred method, time of entry? If we have no news, what is our preferred time of entry? I'm looking for the answer in chat. You could use 9:30. 9:30 would be a scalp, but we prefer to use macro times. Okay, preferably the 9:50 macro or the 1050 macro, and I'll explain why. So the 950 macro has the highest amount of volatility throughout the entire day on indices. If you look at any macro, 950 macro has the highest amount of volatility, meaning the amount of volume that's coming to the market, that macro itself has the single highest probability of moving throughout the day. Okay, there are times you can use 930 that's still going to have volatility, but assuming that we're bearish, sometimes that opening range or right at 930 can be counter bias, right? So it's a scalp for sure, it's still going to be moving. But if we want the highest probability chance of taking a trade in line with potentially where that day or session is moving towards, and a reliable, high volatile, high volume time of day, we're going to be focusing majority on the 950 macro, or at the latest, the 1050 macro. Okay. So now we have kind of a soft like construction program, like a plan for the day. Okay. We know we're looking for scalps. We know that we're looking for preferably the 950 macro, and we want to be with this soft bias. We want to be looking for added confirmation that our bias is correct, meaning the opening range is going to be very important. Why is the opening range important? Because of the fact that if we look at the times of 9:30 to 11 o'clock, we know that the opening range up here is supposed to be 9:30 to 10. And we know that the bottom range down here is going to be 10:30 to 11. And that's important because if you see the fact that, okay, we have a high being formed within the opening range, we now have 5-minute displacement and a sisti or something after the opening range, well, we can trust that most likely that is the high of the session, and we're going to continue lower. Compared to if you had a soft bias that was bearish and you see something like this going on, you got SMT over here, you got displacement through here, blah, blah, blah. Okay, well, most likely our bias is wrong, or it's going to be some sort of consolidation day. We don't really want to be dealing with that, right? So that's kind of the method I'll use, which would be kind of, okay, if you have a soft bias and we know that we're waiting for macro time, let that opening range play out, see what's going on, and then take a low-hanging fruit entry as a result, okay? Yeah, I did take this one, and I'll share the screenshot later. But okay, now we have an approach, and an approach for the market every single day is something that you want to have. Don't come into the day and just have a bias. I mean, that's great. But if you don't know what times you're looking for, if you don't know what kind of price action you're going to trade, you're not going to be convicted in the models that are there, right? Every single time I'm coming into the market and I'm looking to trade, I have a plan in mind. And that plan both consists of a bias as well as an entry model, targeting, how much position size I want to be using. All those things are incorporated into my personal trading. And it should be for you as well. If you're just going off of a whim, if you're just using whatever contract size you want, whatever model, whatever stop size, you know, that it's adding in variance, and inside of that variance sits doubt, and inside of doubt sits fear. Inside of fear sits your coping mechanisms, over trading, over leveraging, right? If you're not trusting your model, if you don't understand what's going on, and you're entering off of a whim with absolutely whatever, whenever, that's inviting fear and inviting over trading and over leveraging into your day-to-day basis. That's something you do not want to have, and you should have no tolerance for at all. Okay, so I want to just get that out, so then now it makes what we're looking for on this day very precise, and this is something that's repeatable, right? I don't want to just give you this because it's, oh, look at today's price action and look how cherry picked it is, right? This is the same exact approach that I'm using every day. We have no news. Every day it's just a scalp. This is the protocol that I'm approaching it with, and it helps me, number one, filter out bad trades and just take good low risk trades, and also know, okay, if this is going on here, say at 9:30 or at 8:50 or whatever, that's something that I don't need, and I'm not worried about missing that move because I know that I have a plan in mind that if it wants to give it to me, that's something that I want to take. That's something I'm confident in. That's something that I know will most likely work. All right. So long time to be spending on the bias, but it's very important on this kind of day because otherwise the lower time frame stuff doesn't make sense. And I can show you executions, I can show you all that stuff, but there's nothing to learn from if, you know, there's no logic behind it. All right. So with that being said, we have 930 printing here. Okay. Hopefully that'll make sense, by the way. 930 printing there. And as we come into the higher time frame charts, you know, we still have this overarching SMT on the higher time frame with YM and such. Is that really something to be incorporated in? I mean, you could use it. Is it as important to be using it? Not too much. I mean, I'm not bothered by it as much. But coming into the opening range, right? We're letting that opening range print and see how it wants to form. We do have very tiny SMT up here. You know, something that may be cherry picked in this case. I'll agree, but we do have slight SMT at the highs. Whether or not you want to use that higher time from SMT isn't as big of a deal. But in here, we have kind of the lower time frame stuff going on. So on the 5-minute chart, I have the 5-minute chart pulled up here. 930 comes in, prints up higher. You see this kind of lethargic retracing back down, and then it sinks right here. Okay, right at 955. So right at 955, you start to see, okay, there's a market structure shift. There's a change in state of delivery. There is displacement, right? All those things are showing you that this, especially if there's SMT and it's digging into maybe a higher time frame PD array, we don't have that because it's obviously all-time highs. This is most likely indicating that this is now going to be what? The high of the session. And we can now say that, okay, our bias that we just had of it being bearish could be confirmed at this point, right? We're seeing all the stuff that's showing that, okay, we're bearish. That open high has been put in, and now we can look for that low to close, even if it's just a scalp for short-term sell side later into the move. Probably we're entering still within that macro time. All right, so I've got PD arrays marked out here. Sure, you have a question? What's up? Yes, that's correct. If we are before PPI, it is low probability, 100%. Which is why I said you can skip this kind of day if you would love to. And by the way, this is all being recorded, so if you want to go back into the recording, you can. When expecting a reversal, we need a breaker market structure shift. Yeah, I mean, any of those are technically confirmations of reversal. I'll use any combination or singularity of one of those three, right? You have a SISD, MSS, actually, well, in order of strength, MSS, SISD, IFEG. These are all confirmations of reversal. And the reason that they're confirming a reversal is because of the fact that they are a violation of order flow, right? A shift is breaking structure. A change in state of delivery is breaking an order block. Also order flow, IFEG breaking a fair value gap, also order flow. So you have a combination of these or single one, especially on the 5-minute chart. You can start to trust that 1-minute PD arrays are going to start holding. And now we see one of this. But yeah, technically you're going to see a break in market structure shift or a breaker on those more reversals. But a breaker, if you think about it, a breaker is a SISD. So anytime you're seeing a breaker, you're seeing a SISD as well. So it's not required that you see the breaker. It's not required. You most likely will see one. But even on these short-term retracements and these continuations, you will see a breaker as well. Yeah, when it comes to entry models, I mean, it depends on, yeah, you won't need a breaker, right? Those retracement entries will have a fair value gap plus inefficiency. Fair value gap plus premium or discount plus order block. So yeah, you won't need a breaker in that case. True, 100%. Yep. So, you know, if you're looking for that kind of stuff, it's still present on every single time frame. But so as I was saying, you have that displacement through here with the shift, SISD, all that kind of stuff. Okay, now it's indicating to you that we are likely putting that high. And now we can start to look for and trust 1-minute PD arrays are going to be holding for the sell side, right? So as we get into the 1-minute time frame, is where we'll start to see all the nitty gritty, as ICT says. And here you have a This is a 15-minute. Let me mark this out just before I forget. But you see the opening range comes up, kind of this very slow move, or the first presentation gap there that it's hovering around and staying within. It drops down here. Fair value gap trades into it, but notice how it's before the macro time. So this is something that time of day is going to be very important in saving you from a potential loss if you're trading before that key time. And those key times are very important because of that this sole reason where you may get false entries, especially if there's no 5-minute structure that's supporting why these 1-minute PD arrays are going to hold. So hovers around here, trades back up again, and then eventually, boom, right here at 9:55, it sinks down. There's probably some news or whatever going on at 9:55. I don't care at all what's going on. Price action will tell me everything I need. You have this drop down here, and you have a mitigation block through this black candle. So as we said before, we'll pause, right? Okay, so now we're seeing everything kind of come into play. Seeing the 1-minute, the 5-minute, the structure going on. We know that we're still in a scalper's mindset. So it's very easy to, when everything starts to line up and you're like, oh my gosh, I'm actually going to get an entry here. I haven't seen an entry in so long, to start to overshoot targets, right? You start to have this very scarce and tight mindset, and you've tense when it's consolidating or when you're in a losing position. And then as soon as it gets into the green, or as soon as it starts to clean up, we have this overly enthusiastic approach of, oh, it's going to go all the way to previous weekly low, right? And we start pushing our targets, or we start pushing our mental targets of how far we think price action is going. But it's very important to have that protocol beforehand, because then when you may not be thinking logically, or you are thinking logically, but you just have other stuff going on, how to stay solvent and how to stay rational in looking for targets and what to expect throughout the market, right? So right here, I have this sell side here, and this is a very, very good target to be using because you have this original consolidation all throughout this price action in here, going into the 9:30 open. Very easy, low-hanging fruit, okay? And this is between your times of 7 a.m. and 9:30 is this kind of first half of the New York session. This is liquidity, right? This, you could almost use it as time-based liquidity. So this being a low-hanging fruit and taking a scalp from here to here is something that you can do. And I want to point that out because that's something that you would be looking for, okay? If it is a swing to Z profile, if it's a New York Open reversal, it doesn't matter. If it's any consolidation, seek and destroy, whatever, if it wants to come back into here, come back to 50% and then consolidate, at least you have taken off a partial or potentially your full pull. So if it's low probability and you're all expecting a scalp, that's something that you want to be taking 50% off, 80% off, whatever, or just using it as a partial opportunity to then take something off and maybe make it a risk-free trade, right? On demo, of course. But I want to point that out because that's something that you want to be looking for, and not always just looking for, oh, what's the furthest targeting can go to, right? You don't want to be looking for the nth degree. You're right. I don't want to be looking for previous daily low and previous weekly low if it's not going to be expanding today, right? So inside of here, for value gap, obviously, plus the order block. This is a mitigation. This last two down closing candles. Why is it a mitigation flux, not a breaker? Because in this case, say there's a higher time from PD up here, right? If this was a high, low, higher high digging into this, and then it flushed, this would be a breaker. In this case, it's failing to create this and creating this kind of SMT. So in this case, this is the strongest PD array in the matrix. This is this mitigation block. You're using these last two down closing candles, or really this last down closing candle, as your mitigation. And whether you mark it from the black candle here, whether you mark it from this here, doesn't really matter as much. Yeah, you could use that as the bearish breaker. That works too as well. Either way, the importance of this is the fact that it's not likely to retrace into premium. Okay, so if you're looking for a retracement style of entry, you're not going to get filled here. Instead, it's going to come back into the inefficiency. And in fact, the inefficient section, the last efficient price delivery point, which is the order block, come up to that, touch that, and then sink lower. So very important that you understand that, because otherwise you're not going to get filled if you're just putting it at premium blindly, not understanding why it's not going to go up to premium. You're going to think, oh, there's a misentry here or whatever. There's an order block that takes priority. It's coming back up into this last efficient section, because in reality, this is a breakaway gap, right? This is a breakaway gap. Why? Because you just had all of this. If you had a bunch of orders in here, it's working all the way through, up, down, up, down, up, down, up, down, up, down, down, sinks. A lot of the stuff, this, you look at this gap, a lot of this upper portion is it's already been painted through over and over and over again. You don't have a lack of paint here. All right, just where it comes up, this tiny section here, it wants to touch back to that there. Now it's perfectly painted over. Now it can leave. Okay, that's the kind of sometimes the shift that you want to be thinking about. Now, this London low down here, also that target like I mentioned, as well as the Asian low down there. And you have multiple opportunities. So you have that entry there that's during the macro time. Ding, sinks lower, fair value gap, order block again, trades up into it at 10:06. That's also entry you could be using. Take that, sinks it lower. So multiple different entry points in there. And then right in here, I want to mention this is once you see the sell side tagged here at 10:11, right? If we go back, okay, at this current moment in time, I don't know if it's going to go to London low. Okay, I have runners for down there. I do not know if it's going to go all the way down there. So I'm taking a lot of my position off here, right at the sell side. Very easy, low-hanging fruit. But I need to see, does it want to consolidate here right at 50% and just kind of enter into this consolidation profile? Or does it want to show me that it's going to continue this market maker sell model and now sell off towards that London low and Asian low? Okay. And this is where, if you've probably heard ICT say this before, or me say this from ICT, obviously I'm not claiming it to be my own thing, is secondary displacement. Is this idea that, okay, we have initial displacement here, leaving this reversal point. But if we start to see this secondary displacement, especially in a key area of the market maker model, we can assume that we're going to get, as a result, displacement, re-entry, and then target, right? Where exactly is this secondary displacement going to happen? Where am I looking for it? In this last manipulation leg forming the high, okay, this last manipulation leg up from the low to the high there, we have our -1 to -1.5. That is our silver bullet zone. Okay, so if I see displacement now through that swing low, if there's a swing low formed within it, because we have a swing low, boom, right there. If I see secondary displacement, what can I assume as a result? Number one, okay, that market maker sell model is probably going to complete. Number two, there's probably going to be a fair value gap because of that displacement in line with an order block, in line with time of day. Number three, it's probably going to retrace back into that fair value gap and order block and offer me a re-entry and then sink down towards my target. So in this case, this is a PD rate, not a PD rate, but a signature that you can be using to see, does it want to confirm that we are continuing that market maker sell model? So I'm still taking something off there, but if I don't see the secondary displacement, I know to either manually close out the rest of my position. If I do see it, I can trim my stop, leave my target at the -2, -2.5, and do whatever I want right at that point. I can leave the charts. But as a result, you see a print, comes back up, touches the order block there, and then boom, now you have secondary displacement, fair value gap through that swing low inside the -1, -1.5. That there confirms the market maker sell model. All right. It's not cherry picked. You can go back in and look for it if you want to. But at that point, okay, now when this 1024 candle closes, boom. At that point, you should say, okay, the London low is an easy target to you're looking for. You can keep your runners on. Don't have to manually close out the position. You can trim your stop, blah, blah, blah. And it's kind of not a guaranteed trade, but I'm pretty confident at that point, my targets are going to be hit. Okay, so continues to sell down, consolidates here, runs this out 1047, trace a little bit going to the 1050 macro, sells off again into the Asian low and eventually into a fair value gap there that we talked about on the higher time frame, the 4-hour gap. All right, so that's kind of the lower time frame price action. What percentage are you taking off on the first target? I took around 70% off here, 60 to 70% off on the sell side. And then the other 20 to 30% was resting at the London low. But yeah, so before, and I titled this a scalping model because I do want to explain the model here. Do you tend to take into account the internal run and stops between 10:30 and 11:30 when you're in a trade zone? Yes, I do. It's a good question. Phenomenal question. Yeah. On those kind of days that I'm taking that entire dealing range, normally it starts at 11:30, right? That run on stops happens at 11:30. That's why if I'm taking that kind of trade, my stop will be trimmed to like a 5-minute order block. Not really a 5-minute. I'm not going to be constantly trimming it. So like right at 10:30 is kind of that last section I'll be trimming my stop till. From that point onwards, I'm kind of just letting it go. So phenomenal question, but yeah, I'm incorporating that into my runner. If it does in fact want to give me that entire daily range, then I will be putting that into account and just trimming my stop up to like around 10:30 ish on a 5-minute chart, leaving that stop there and just letting it go. Especially if same thing if I'm trading until 1500, right? 1500, I'm gonna leave that there. Or if I see the same thing go on during 12 o'clock, I'll trim my stop to that lunch, swing high or low, and then run it till 1500. In this case, I did not leave it till noon or anything like that. But good question, phenomenal question. But I was talking about a model here, which is in this August PA, in this difficult price action, we're kind of have to take extra precautions, right? We can't just sometimes be taking the turtle soup, or at least for me, it's much harder to trust the turtle soup in this kind of scenario, even if it's following my rules, just because of how choppy the environment is, how consolidation prone it's likely to be. I want to see steps 1 through 7 form instead of just taking the step 2. When price action is very smooth and it's just one-sided, you can get in right here and be fine. I like to instead let this happen, let this happen, let this happen, and then get in maybe here. Right? I want to let step 1, 2, 3, 4, 5 go on, then take the step 6 instead of taking the step 2. So what can we look for? What kind of model can you be looking for? So it's a scalping model that has a tight stop, allows you to get in an entry that's maybe a bit further onto the move, but still has a tight stop, and kind of helps build that narrative in with the entry. And this is just a very simple 1 minute or 15-second SysD. All right. So what you want to be looking for is that same exact model that you're using. So whether it's a retracement into premium or a breaker plus fair value gap, normally, someone who's been to say this is like September PA or October PA, right as they're touching that order block, you could get in, right? And I'm not saying this is a bad trade either. If someone's very confident about the bias and know what they're looking for, phenomenal trade there, right? But consider this: if it's low probability, where do you place your stop? Do you feel comfortable placing your stop right at CE at the breakaway gap, or do you want to place it up here, just to make sure that if it does want to consolidate, that I don't get stopped out? Things you have to consider. I would much rather it trade up into this order block and fair value gap, and then give me a SysD here. Just a very, very tiny change to state delivery. How is this a change to state delivery, Flux? Because the nature of that name, change in the state of delivery, is indicating a flip from a short-term buy program to sell program, or sell program to buy program. So this right here, this singular candle on a 5-second, 15-second chart, this is a market maker buy model, a short-term buy program. So as a result, as soon as it takes out that opening price, it is now telling me, the same thing on the 15-second chart, it's now telling me that it's entering back into that short-term sell program, which is part of that longer-term sell program that started from up here. Okay, so if I go back to a 15-second chart, you'll see this same exact thing. And you can take this almost everywhere, right? It's so common that the nice thing about this is, okay, if you see the higher time frame PD array, trades up into it, wait for that secondary displacement, boom, you can get in there, tighter stop sometimes, added confirmation of entry, and you can use a stop limit order or just a market sell order on demo. Get in there, place your stop at an invalidation point, and be a lot more comfortable and confident in that kind of entry, which is what I'm doing in these kind of conditions. Is just taking 1 minute SysD entries on basically every single point that it's giving me a point that it's entering back into that sell program towards my target. I can either pyramid in or get in the chunk of my position, and keep a very tight stop on a 15-second chart or 1 minute chart, and just ride on the way down, taking my partials as I go, re-entering as it's giving me one. So I believe on this trade, I enter majority of my contracts here, pyramiding in basically as it's giving me stuff in here, taking some off there, re-pyramiding in off this SysD here, and then taking more off of the London low. And then the last runner I had got stopped out back in profit. Let me see if I can pull this up for you. If you got any questions, you can put them in the chat. Protraction, I mean, protraction about what? Like the daily protraction? But yeah, Dean kind of explained it there. Pull up my executions. Show chart executions. So this is that this right here is my executions. So like I said, kind of just any single SysD that I'm seeing on a 1 minute or 15-second chart, I can get in, take some off as it's giving me, and just kind of scalping on the way down. Right? It's not. It's definitely more aggressive, but I'm treating this like a scalp. You know, like I said, I'm not trying to take the entire daily range. I'm just trying to take what's giving me, small chunks, and be done. So I'm getting in on 16, which is about here. Basically, as that candle's closing, definitely a kind of a piss poor entry on the first one, but pyramiding in as it's giving me the retracement, and more SysDs, taking some off there. Another sell short on the rejection block, buying it back on the sell side from the low-hanging fruit sell side I talked about, selling one more on the SysD here, the secondary displacement, buying more back on the London low, and then the last runner that I had got stopped out in profit right before it sinks again down to the Asian low, which is my last target for the day. Overall was around like a 5R or something. So, you know, just with scalping, that can be an entire week just with scalping if you know what to look for. I don't plan that on being my entire week. I do want to trade Thursday, Friday if it gives me something. But that's it, right? Like it still follows a logic. It may be a little bit more choppy, but you know, it's manageable if you know what you're looking for. You have to have a plan. If your plan is just to trade your normal model or your normal conditions, you're not going to get filled. Right? You may not get filled. You may get stopped out prematurely. You have to accept risk, meaning you can't trim stops super tightly. And you have to be aware that a lot of times these kind of conditions do not favor people who are getting in early. They favor people who are getting in when there's extra confirmations. Okay, they want to be stopping people out. Not they, but let's just say this August PA favors key time, key price, all that stuff. You cannot get antsy and take entries just because you see them. I like to see numerous confirmations to make sure, okay, I'm getting in on sides. It's kind of doing what I want it to do. I can take this entry. Number one, feel confident about it. So if I lose, not a big deal, right? And I know that I have the easiest and highest chance of winning that trade, even if it's just a scalp, right? Because a win is better than a break even, which is better than a loss. Of course, you don't want to be looking and focusing at that, but just the obvious fact of the matter is that the easiest trade and the winning trade sometimes is going to be later on. And it may not be the sexiest one, but it works. Okay. What do you expect from the market to do in the rest of the week? I'm really not sure. These two new drivers that we have coming in are very high impact and almost as high impact as CPI, but pretty close. So I'm being mindful of this in here. Not saying it's gonna outright reverse, but as of right now, it's just continuation higher as long as we're holding these fair value gaps and order blocks and such. But since we did take out this swing high, and we have kind of this consolidation building in here and some of those low-hanging fruits, I wouldn't be surprised if we get a short-term retracement for a move back higher. We're putting in a lot of stops in these lows. So I'm playing this entire month, and obviously this week as a day-to-day sort of thing. I'm not really playing weekly profiles as much. I'm letting the price action, the pre-market do its thing. If I wake up in the morning and it's good, I'll trade it. If it's bad, I have no problem skipping the day and carrying it on to the next. And that's the kind of approach that you want to as well. Trimming stops can be above a balanced price range. Makes sense. It's much harder to do that in these kind of conditions. I favor 5-minute PD raise. 1 minute intermediate term highs and lows sometimes can even get stopped out. Same thing with balanced price ranges can get retraded back into. So 5-minute order flow is normally the best. And then intermediate term highs and lows and stuff like that. But yeah, balanced price range should hold, but sometimes it doesn't as much. Yeah, CEs would be fine. Yeah, fair value gaps and order blocks. I like 5-minute order blocks. Just because if we're continuing that expansion, those normally won't be violated. No problem, trader funded. See you tomorrow, God willing. Yeah, yesterday's price action. I mean, I skimmed it over. There's not a whole lot of good stuff. I mean, like, there's not. It's just a choppy, annoying day, you know. But coming into it, on a 15-minute chart, I really just think that this is a day that I'm going to lose on. You know, coming into it, it's very hard to read this. Well, seek and destroy-esque, but a lot of consolidation here. Runs up at 830, takes out the swing high, fills a fair value gap and drops down. To me, this is I'd be bearish all the way through. I didn't trade yesterday, on stream or anything like that, but same kind of market in here, right? This is a scalping environment. You got short-term runs on stops back and forth, and then I guess this would be a London protraction profile. But you can go into it and you look for value gap entries and such, but and SIST entries if you wanted to. But this is something that is just gonna be miserable to trade. You got 930, 830 expansion, 930 delayed manipulation, 10 a.m. expansion towards target. What are you gonna do? Right, you're gonna get psyched out here. You're gonna get psyched out here, and then 10 a.m. must have come back up to the chart. Hard PA, very hard PA. So yeah, it's you got to play it safe, play it smart. You're gonna get baited into trades that are end up losing, and you got to just deal with it. Okay, it's gonna be frustrating because of that, but keep your risk management as the #1 priority, and you'll be absolutely fine. Yeah, 950 macro on 50 points. Yeah, there you go. That's not a bad idea. But anyways, I don't want to be on the screen too much longer. We'll do a psychology stream probably sometime this week, and then for the guys in the private group, I'll either be streaming tape reading either tomorrow or on Friday. I still gotta get properly cleared, so I'll keep you guys updated around then. But I do have a psychology stream I'm planning for kind of the same way that we had last time, which was about those who are very close to payout, like people who should be getting payouts and you're maybe not yet, but kind of the mentality and what you should be thinking and adapting the identity, adopting and adapting an identity to one of a profitable trader instead of one of someone who's maybe still a student. All right, so this will be uploaded onto the YouTube vid, so if you want to go back in and watch it, you can. And then I'm still getting to DMs, so I may not answer a lot today. So I apologize if I do not get to you, but you will be answered soon. All right. So take care of the rest of the day. Make sure you journal and do the things that are necessary to succeed, as always. Be safe, be smart, and I will talk to you guys very, very soon. Peace.